Opening is soft, 38 point lower, 40 point lower on the Nifty now. 10,980 is now history.
The Nifty is currently down around 68 odd points. We have the Midcap index, which is at the low point of the day.
Nifty has slipped well below the 10,900 mark. The Midcap, there the pain continues actually, I think, for the third day running.
We've seen lots of weakness in Nalco on the back of numbers, and there's something like Kajaria Ceramics, Jet Airways, ICICI Pru, DHFL, First Source. So much of weakness in a lot of these stocks.
Weakness persists on Dalal Street. The Sensex and the Nifty closed with losses of about 0.5% each. The Midcap index underperforms peers. They end nearly 2% lower.
Nifty IT index bucks the trend, gains 0.5%, pulled up by HCL Tech, Tech Mahindra and Infosys. PSU Bank index loses over 1.5%, led by SBI, Bank of Baroda and PNB.
Mahindra & Mahindra takes a knock in trade after the company cuts its FY19 tractor industry's growth guidance to 10% from earlier 12 to 14%. The stock falls 5% after the sharp fall that we saw on Friday. Escorts, the other tractor maker, also loses in trade.
Apollo Hospital ends the day 11% lower after concerns relating to an increase in pledged shares make investors jittery. Imami also tumbles after reports suggest that refinancing of promoter loans has been challenged. The Iman Housing also reels under pressure after a fresh notice from the Income Tax Department.
Eicher Motors meets estimates in the third quarter, but the stock ends 0.5% in the red. Sun TV, on the other hand, surges over 10% after posting a strong third quarter. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to a fresh new edition of Markets Ready Talk Back. This is the show where we tell you all about the 6 hours of the day's trading action in just 5 headlines. I'm Prashant Nair, and with me today is my colleague Surabhi Upadhyay. Hi, Surabhi.
Hi, Prashant. Not a great way to start the week, I guess. I mean, if last week we were toying with the idea of 11,000, at least Monday trade made that mark look a little more distant, wouldn't you say?
Yeah, absolutely, Surabhi. And I mean, it was poor from the word go, right? I mean, there wasn't any real great confidence. Mid-session, maybe there was that pullback which came through, only to get sold into in the last 60, 90 minutes of trade once again. So I mean, it didn't look very strong, or the market didn't look strong or confident at any point through the course of the session. And I think that was even more evident because of essentially the broader market. I mean, while the Nifty was down by close 40, 45 points. We had the broader markets, the mid-cap, small-cap indices, etc., which were down between 1.6 to 1.8%. So the breadth of the market, 2:1. I mean, in favor of declines. You could, even with 2:1, you'd say that it's actually been a better day for the broader market as compared to the last several. So, large caps, the same, 6, 7, 8 names, the HDFC Twins, the Infosys, the Reliance. So those are stocks which have seen this buying rotation come in and go out, and that has helped the Nifty get up to 11,000 only to get sold into, as we saw. So, and of course, there is the problem of the broader market as well to boot. So it's not a very confident kind of start to the week, and I think tomorrow again, the focus, more than the Nifty, I would say, is going to be what mid-caps, small caps and generally broader markets do. But Surabhi, why don't you take us through stocks and what happened?
Well, absolutely. The weakness was quite persistent, whether you're looking at the large cap space and mid caps, of course, specifically. Let me quickly run through some stocks. On the large cap side of the screen, if you're talking about some of the pressure points today, you had names like Dr. Reddy's, first of all. One of their plants, Bachupalli, there's a problem there. There's a EIR inspection happened, so the market was quite nervous around that. M&M, ONGC, these were the other names. The problem today was that heavyweight stocks weren't willing to stand up and get counted, whether it was Reliance Industries, ICICI Bank, SBI. No support from these big boys coming through today. The green on the screen, so to speak, came in the form of Tata Steel. Interesting recovery on the stock, despite the performance being a little lower than expectations. Cipla managed to move a little higher. Tata Motors, maybe this was some profit-taking, shorts perhaps taking profit after the huge cut we saw in the stock last week. And there was some more buying on Z Entertainment. Some interesting auto and auto ancillary results in focus today. Eicher Motors numbers absolutely in line, but the question is the worst over or not? And that's where there's no clarity. 0.5% down on that stock, though it was off the lowest level of the day. Motherson Sumi, again, sluggish trends kind of have continued, though again, at least no fresh shocker from the results this time around, 2% down there. Balkrishna Industries from the tire space did much better, 6% up on that stock. Coming to the mid-cap screen, now here we could go on and on. I mean, look at the way the screen is adding up. Apollo Hospitals, anywhere where there is an issue of pledge, where promoters have pledged their own shares, the market gets very nervous. Emami and Apollo were two classic examples of that today. Graphite, Nalco, these were some of the other stocks. Big names, Kajaria, Jet Airways, Ashok Leyland, no takers whatsoever. Big cuts coming in, 4, 5, 6%. Let me not end only with the losers then to talk about some of the green on the mid-cap screen. Sun TV's numbers have been very well received this time around. Good growth on the ad revenue, subscription revenue, 10% up on that stock. Dilip Bilkon and Mindtree was some of the other spots of green in an otherwise sea of red, Prashant.
Absolutely, Surabhi. So more pain than gain, generally speaking, if you look at the entire market. We've got Deepan Mehta, member BSE NSE, joining in. We've got technical expert Ashwini Gujral, who are with us to decode the market. They'll, of course, also take your questions in just a bit. But before we start the Q&A part of the program, let's quickly just set it up with Ashwini, you, and what's your assessment of the day's trading action? Broader market, immense pressure once again. Your sense?
See, overall, you can say the markets are extremely choppy, which means that on both sides, the participation is low. Again, 5 stocks are holding up the index, etc. So the play is that, you have to play narrow ranges, back strength for the day, back weakness for the day. But overall, it's still, 6 stocks going up for every 300 which are going down. So I don't think that way much has changed. We could do ranges of 100 points at a time, like 10,850, 10,970, 980. So on both sides, the momentum is fairly slack. So the idea is for the day, we took some long positions below 10,900, and maybe tomorrow we can do 50, 70 points on the upside. The range is narrowing further as, people are losing interest in the market.
Okay, the second headline, Ashwini, stay on. The second headline among sectors that moved today was from the IT space. The Nifty IT index gained 0.5%, pulled up by tech majors, HCL Tech, Tech Mahindra, as well as Infosys. All of these stocks gained anywhere between 0.5% and 1%. On the losing side, as we told you, PSU Bank index was down over 1.5%. SBI, BOB, PNB were some of the culprits. Well, I think we have a caller joining in now. Suresh is joining in. He is from Bangalore, and he actually has a query from a company based out of his city on Wipro. Now, let's see if we have the line through with him. Suresh, can you hear us?
Yes, please. Yes, please.
Yes, please share your question.
Yeah. Yeah, good evening, madam. I'm holding Wipro at the rate of 285 rupees of 100 stocks. So can I hold or book profit? Or can I avail that bonus?
Oh.
Recently, the company has announced a bonus something.
Okay, so your cost is 285, stock closed at 374. Deepan, what should Suresh do?
So I think after many quarters, Wipro came out with a decent set of numbers, and even management commentary was quite upbeat, the best I've seen in many months. Maybe, one good result leads to another, and you could see even the March quarter numbers to be quite in line with street estimates or slightly better. It's a nice trading bounce happening across IT shares, Wipro included. So I'd say best to remain invested for a few more months. But Wipro and other IT shares are not great for long-term investments. I think going forward, they may face challenges as the year progresses. So at some particular price point, I'd look at exiting out of Wipro as soon as I'm convinced that maybe the growth again is slowing down for the IT sector and Wipro in particular. So for the time being, remain invested, but look for exit opportunities maybe 3-4 months from now, perhaps after March quarter numbers also.
Okay. Ashwini, just quickly on Wipro, the stock has had a dream run. Now, for someone who's actually sitting on profits, what do? Would you continue riding this?
Yeah, 285 is a decent price, but again, these guys are also cyclical, and we've seen the down cycles that IT can go through. I think Wipro I would probably trail some kind of a stop. Maybe 345 is a decent stop, and if you see in the last 15 days, Wipro has gone from 315 to 375. So definitely a stock you don't want to get out of, but keep a trailing stop of 345, and if this rally continues, I would think 500 is possible.
Okay, so hold on, Suresh. That's the advice coming in from both Deepan and Ashwani. So that is Wipro for you. We move on to the third story of the day, and this is coming in from the auto space. Mahindra & Mahindra took a knock-in trade after it cut its FY19 tractor industry growth guidance to 10% from the earlier 12 to 14%. M&M fell over 5% after the sharp fall it already had seen on Friday. Escorts too lost about 4% from the same space. Sonia is here with more details on the guidance and the commentary from Mahindra & Mahindra. Sonia.
Well, M&M was one of the biggest Nifty losers today after the company cut the tractor industry growth guidance for FY19 to 10% versus 12 to 14% earlier. Remember, last quarter as well, they said that they will barely manage to meet the lower end of the 12 to 14% band, and this quarter they cut that to 10%. They also expect passenger vehicles to grow to just about 5% in FY19. They say demand trends are weak and the industry is challenging. Going forward, a lot of brokerages have cut their target prices on the stock. UBS cut it to 880 versus 950 because of rising competitive pressures in the utility vehicle space. They say that due to BS6 transition, there will be additional higher costs that the company will have to incur, which could put further pressure on margins.
Okay. All right, Sonia, thanks very much for that. We have a caller with a query on Mahindra & Mahindra. Pawan Kumar on the line. Pawan Kumar, how can we help you?
Yeah, hello. Good evening. I bought M&M at the price of 700, around 708, around 150 quantity. But after that, I bought again 100 quantity of that. I'm a long-term investor on that. You can just suggest me on that, whether we can hold or need to out of that.
Okay. I mean, price is today is 650. Mr. Pawan Kumar, your cost is 770. Hold or sell? That is the question. Ashwani, what would you say? Mahindra & Mahindra?
Basically, autos have been in an uptrend for a long time, and now they are going through a soft spot. Now, autos by their very nature are cyclical. In fact, in this country, the down cycle is fairly shallow because, it's kind of considered as consumption. So my sense would be that if you are a long-term investor and you intend to hold on, possibly you have no choice, try to buy in this 570 to about 650 zone and, hold on. Because as and when the cycle turns, M&M's high was about 900, good company, sales will go up and down, but there's nothing impaired or over leveraged balance sheet, etc. So try to average lower, and once markets pick up, you will see fairly strong returns here.
Okay. All right, gentlemen. Stay on. We need to take a very quick break at the moment. But do listen in to what Madhav Dhar of GTI Capital had to say about the market going ahead. Listen in. We will be back in just a moment.
There is way too much emphasis on trying to pick the right stocks at the right time, both in terms of timing and in terms of alpha generation. I think it's far more important to be structurally long at the right times. And within that, if you can add value, so much the better. And there everybody has their biases, whether it's a sector bias or a growth bias. I personally have sort of a value contrarian bias. So I am attracted to things that are beaten down, where there is demonstrable value, even though they may not be the hot areas.
Let's move to the fourth headline of the day. Apollo Hospitals ended the day 11% lower despite a strong quarterly performance. Now, concerns relating to an increase in pledge shares made investors quite jittery. In a conference call, the company's management clarified and said that the quantum of pledge shares has gone up by 5% only recently. Speaking to us later, MD of Apollo Hospitals, Sunita Reddy, said that the company is going to reduce pledge shares by as much as 50% over the next 6 months. Take a look.
So there was a 5% increase in the pledge, and this happened because during December 2018 and January 2019, we do have a liquidity event which got delayed but will happen in the next year. We're quite confident it will happen in the next 3 to 6 months, which will bring down our total pledge by 50% for sure. Nothing has been sold in the market today. There is no issue about liquidity in the promoter level.
Imami was the other one which also fell in trade after a report suggested that refinancing of promoter loans has been challenged. Remember, out of the 72% stake held by promoters of the company, 50% actually has been pledged.
All right, and speaking of companies which have concerns surrounding them, Diwan Housing was really under pressure today. This after sources said that the taxman has sent notices to the company under Section 131 of the Income Tax Act, asking it to explain certain suspicious transactions found in its books. Timsi Jaipuria has more details. Timsi, what exactly is the case that the IT department is building?
Well, sources have indicated that the IT department last week itself had sent notice to DHFL seeking details, asking them to furnish books of accounts to explain certain suspicious transactions. Now, what we learned from sources, the fact that IT department under Section 131 of the IT Act had sent summons to DHFL asking them to come in person or send a representative to the Mumbai division of the IT department to explain and furnish certain books of accounts to explain certain suspicious transactions. Now, the IT officials, however, when we contacted to seek more details, did confirm this and said that IT department has identified several suspicious transactions which need to be explained. Now, what is the nature of these suspicious transactions is not known as yet to us, because these could be certain investments, certain receiving from some accounts, etc. That is not known. IT department normally under Section 131 is authorized to summon a company or an entity to ask them to come in person to explain certain transactions, come up with proofs with books of accounts to explain the receiving or trying to send money wherever, whatever is the nature of the transaction which is under question. And thus, under this particular section is what IT department has asked DHFL for further explanations. Let's see what happens finally, whether IT department gets enough proof to claim that these suspicious transactions are questionable or not, is something that we need to wait and watch.
Thank you very much for that. We've got a question coming in on DHFL. Krishna Reddy from Hyderabad has written in. He's been holding 220 shares of DHFL. His cost is 224 rupees a piece. He wants to know if he should continue to hold or sell now. Deepan, what would you say?
That's a tough one to answer, Prashant. I think so much of damage has taken place on the stock price, and controversies surrounding the group just don't seem to be ending. And it's really getting in from bad to worse, I would say. But maybe it's a good time just to knock off DHFL. Book the loss and move on. I think these things tend to get quite ugly, and even if some clarifications were to come, for the stock price to move up back to a cost level is going to be extremely difficult, may take an extended period of time. So I think it's better to bite the bullet and knock off the shares, book the loss, move on, and maybe there'll be other companies, other NBFCs where the investor can try and make up the loss.
Okay, Ashwini, on the charts, I mean, stocks completely broken, all kinds of levels. Now, for those who want to go short, is there anything still here to play?
There's nothing long-term in DHFL, so please get out. I mean, all these inquiries, they don't lead anywhere, and if something comes out, again the stock will fall. Plus, you have pledged shares. So in an environment like this, you don't want to get into any controversial sort of stocks.
Fair enough. Okay, let's then move to the last headline of the day. Earnings on our radar. Eicher Motors reported an in-line set of numbers for the third quarter. The stock, although, ended over 0.5% in the red ahead of just after responding to those numbers. Net profit beat street estimates, while revenue was a minor beat. Sonia has all the key highlights.
Well, thanks a lot for that. Eicher Motors reported numbers that were muted but in line with street estimates. So the revenue growth for the company was just about 3.2% because of a 6% fall in volumes that Royal Enfield business saw this quarter. Even the profit growth was hardly anything to write home about, a 2.4% growth. But the big takeaway was the fact that margins for Eicher Motors have slipped below 30% for the first time since March of 2016. On the margin front, 29% is what they clocked in, lower than street expectations as well. The stock closed in the red today.
Sonia, thanks very much for that. Sun TV too came out with its third quarter numbers. But the numbers, of course, came out on Friday evening. The stock surged over 10% after profit beat estimates. Revenue too rose about 30% on a yearly basis, coming in at over 900 crore rupees. Ad revenues and subscription revenues were up. EBITDA margins were also above expectations. So that was Sun TV for you. Big bump in terms of numbers. Ashwini and Deepan, thank you very much for seeing us today here on this edition of Markets Today Talk Back.
Okay, all right. With that, it's gotten down on this edition of the show. Thank you for watching. Have a great evening. Let's see if the Bulls can reclaim any lost ground from today, Prashant.
Oh, absolutely. Thanks for watching.